All right, folks, welcome back to the Taylor Tax Show, the podcast that helps highly paid, highly taxed, and high profile taxpayers save a bunch on taxes legally. I'm Terrence Taylor, and this is my partner, Big Al. So, what's up, Big Al?
What's going on, everybody?
All right, and we're the co founders of Taylor Tax. We're registered or we're enrolled agents, so we're qualified tax professionals. And today's show, episode 12, we're going to be talking about private equity. And like the other things we spoke about, this is one of the levers you can use to save a bunch on taxes legally. And we're not going to go very deep into this, but we're going to be asking and answering three questions. What are the tax benefits of starting and running a private equity fund? Second question, what are the tax benefits of working in private equity? And then the third question, what are the tax benefits of investing in a private equity fund or investments that a private equity fund does? So first question, Big Al, what is or what are the benefits of starting and running a private equity fund from a tax point of view?
All right, great. Well, I'm glad you asked, and I'm going to mention it to you just from an overall standpoint. A private equity fund, all it is that you're pooling capital from private individuals. None of this is going to be traded on the stock market, so it's not regulated by the SEC, but it is regulated by, it is regulated by the Securities Exchange Commission, but not as a publicly traded company. So you're pooling these funds into a partnership. What you're doing is you're creating a limited partnership, and the way that this particular strategy works is that you are a general partner in this limited partnership, and your income or your portion of the fees charged to operate this partnership are going to be recharacterized into pretty much long-term capital gains. And what happens is you're going to have to hold on to it for 3 years before that recharacterization takes place, and you only have to pay 20% on your portion of the profits or your portion of the fund, the profits that you make from that fund. But that's considered the carried interest tax provision based on Section 1061 of the Internal Revenue Code. But yeah, so now that's the basics of what a private equity fund is and what this particular tax strategy is. However, let's jump over to you, Terrence, where it concerns if you're working in private equity. What are some the tax benefits associated with that?
Well, Big Al, there are really two. One is, again, the carried interest. So to the extent that you are participating in the carried interest as opposed to paying a maximum income tax rate of 37%, you only pay 20% on the carried interest. And then the second benefit is the deferred compensation. So in private equity, deferred compensation plans can be structured, and this allows employees to defer a portion of their income to future years. This potentially reduces income taxes, its current income taxes, as well as just benefiting from tax deferral. Now, just to be 100% clear, obviously, if you have a base salary and you get bonuses while you work in private equity as an employee, you still pay ordinary income tax on those. But the carried interest and deferred compensation could be a way to save a bunch on taxes. Big Al, let me hand back over to you. Like, what are the benefits from a tax point of view of investing in a private equity fund?
Well, no, I'm glad you asked. And the thing about the benefits is that when you're investing in a private equity fund, earlier I was talking about as a general partner because the ownership fees that you get to take are usually taxed as ordinary income, but with the carried interest provision, it transforms it into a long-term capital gain. But let's just say that you're just investing in it. So you're one of the limited partners that are investing into this limited partnership where you're pooling the private equity and so forth. Then this is more so a passive investment for you. That's a benefit in and of itself. But from a tax perspective, what this does is that how the fund is going to work is that it's not going to deliver to you deliver to the fund a bunch of short-term gains. It's going to give you long-term gains. And what this does is it unlocks your ability to write off capital losses in various other areas of your portfolio. Like I've got some clients that have tons, or let's just say they got 6 or 7 very large rental properties, and they have passive losses in them, and they have a couple of pretty large capital losses as well in a couple of investments that they had to turn over due to a transition in life. However, all those capital losses are pretty much being carried forward into future years because they don't have any capital gains to offset them. Oftentimes, in the tax planning standpoint, where it concerns capital gains and passive gains, capital losses and passive losses, is that there are going to be some years where you have the losses, many years that you have the losses, but very few years that you have the gains. What this does is it opens up the gains so that you can now bring in that income for that particular year, but not have to pay any taxes on it because you are using previous capital losses that you weren't able to take. But that's one of the biggest opportunities that you can find when it concerns investing in private equity fund. And just like with other strategies like the 1031 exchange, there are ways to kind of keep carrying some of these profits. Let's just say you don't have enough losses in the past to offset these gains. Let me use the right term. Let's say you don't have enough losses to offset the gains, not profits, the gains. Then there are ways that you can reinvest and use those and utilize and not have to pay taxes on those gains until future years based on how you reinvest it. So, yeah, that's pretty much it, or at least for this superficial level that we're getting into now. But we could definitely talk offline because it's a very nuanced and more sophisticated tax uh, planning strategy. What are your thoughts, Terrence?
Um, Thanks, Big Al. So glad that you shared those aspects, especially as it comes to planning and making sure that you can defer taxes on gains, right? Another thing I just wanted to quickly touch on is what are the types of private equity funds that folks tend to have, right? So
Yeah.
it's to help people to like contextualize, well, how would I use this strategy? Would it even matter to me? So let's say you are in the space where you want to invest in real estate and you want to start a fund. You could start a private equity fund to do that real estate investing. Let's say you want to do leverage buyouts or you want to invest in companies and take them private. You could start a private equity fund. Let's say you want to get into venture capital. You want to start investing in maybe tech startups in Africa. Hint, hint, Big Al. So if you want to invest in tech
Yeah.
startups in Africa, you could start a private equity fund. So those are just 3 examples of the types of investments strategies that make sense to use a private equity fund for. And Big Al, one of the things that we keep sharing with folks is we want you to know how the U.S. tax code helps you to save a bunch of your taxes legally. So this is an opportunity to share that anyone that wants to know a bit more about private equity can go to Tax Strategies GPT. We'll put that together on the OpenAI GPT store. So check that out and ask any questions you have around private equity and get some good answers. When you're ready to go a bit deeper, you want to talk to either one of us, you can email me, Terrence at taylortax.ai, or Big Al at taylortax.ai. All right, folks, let me hand back over to you, Big Al, and ask you to take us home if there's any closing thoughts you want to add.
Yeah. I'm glad you were towards the end talking about the different types of equity funds, private equity funds. The whole thing about private equity and why it seems so general is because it can go into so many different types of things. Of course, you got real estate private equity funds. There's venture capital. There's leveraged buyouts. There's growth equity funds. You can even have a private equity fund to invest in other private equity funds. Matter of fact, I had a college friend, a couple of college friends down in Texas, close to where you are, that got involved in oil fracking right after college. So he's been doing oil fracking for over almost 2 decades now. But he put together a fund to, pretty much to purchase lands that are rich in those types of minerals, and that can return you a pretty large return on your investment by investing in those. So I was approached maybe a couple of years ago, and I need to reach back out to them about it because I know it can help quite a few clients of mine. But a private equity fund is literally to do whatever you and your partners have decided to do it in. But the primary goal is to make sure you're doing it in something that you have a lot of expertise in, because you don't want to lose the money, or that whoever the general partner has or whatever the general partner has a lot of expertise in, because you don't want them to dip and dabble your funds, because you're investing hundreds of thousands, tens of thousands to hundreds of thousands of dollars in there. You don't want them to do it on a fluke or something that they're not very familiar with. But yeah, so that's basically it. It's a phenomenal opportunity once again, but with our type of clientele, high income, highly paid, highly taxed, and high profile individuals. This is a very huge opportunity for you all, but just make sure that you understand the basics of it, how it's going to help you from a tax standpoint before you jump into it. And that's where Terrence and I get involved, or any other tax professional with some level of a designation. So that's pretty much it. And like Terrence mentioned, make sure to check out Tax Strategies GPT. It's a phenomenal tool that we use on a regular basis, and can't wait to talk to you on the next podcast.
Folks, thanks a lot. We'll see you soon. Cheers.
Cheers.